Welcome to Java. Thank you kindly for joining me. It's December 12th, 2024, what many are dubbing as Super Thursday. Now, we are expecting the PPI data coming out prior to market open this morning, but this is also on the decisions of central banks as well as other data coming out from the other central banks. Now, I would like to start this with thanking everybody that came into the Discord last night. I am super thankful for the Discord group that we have. We had a couple of surprise guests as well as the Truth Warrior came in last night. We had some, I think, very good discussions on some things that we're moving forward with. And we've got quite the group there for various topics. So if you haven't joined us there, feel free to do that. And we've got a couple of announcements that will be coming forward with that as well. So I would like to extend my thanks to Truth Warrior for that and everyone that came in, and as well as your patience with a lot of the background noise that we had. We'll be working on a little bit better method of delivery for that for future occurrences. So with this, let's get into the markets. So our favorite risk indicator is increasing rapidly. Now we're at 284.8. This is significant this morning. We are watching the relative strength of the dollar, and this is across a lot of the data and things that have happened since yesterday in the markets. Now, moving forward with the fear greed meter right now, more retailers pulling in, had a green day yesterday in the markets, and on that positivity, more retailers jumping back in. Now, we've got the relative strength of the dollar increasing a bit as well as the 10-year yield. So this is suggesting a bit of a pullback today. We will have to see what that report comes in with the PPI. Now, the sentiment right now is, while the report came out yesterday, the core inflation report, it was up a bit, right in the perfect zone. And this sent the message to the markets to buy. Ignore the gap and chasm in valuations at the time, because this means the Federal Reserve is going to cut next week. And so the market is pricing that in with buying. So we've got a green day into the numbers we're getting prior to market open again. The producer price index, this number is a number indicating the inflation that producers are facing. And if the number is higher, this means that prices in the long run are going to be higher. So we are watching another divergence in this recovery of the K-shape. Now, this is shown through the real economy, where the spending is going, as well as loans and credit. And we'll talk about that in a bit. So we've got PPI coming out, as well as ECB rates. They're expected to cut. We did get the Swiss National Bank came out with a surprise 50 basis point cut. They were talking about a quarter base rate cut, as well as the ECB. Now, ECB looking forward to quarter point, as well as United States. Now, what are we watching going forward? My opinion is the largest indicator, and it will have to be taken apart from the reports, because the reports now are skewed. But the number I'm talking about is unemployment is the metric. Now, I expect this to rise, and I'll talk about that a little bit more in a minute as well. So we've got the United States deficit widening in November on higher health and defense spending. No shock. Most of this has been going to foreign aid in the form of weaponry. So the defense spending has been increased massively, with the current administration also sending an additional $20 billion to hit before the end of the year. And in case you haven't seen the calendar, end of the year is only a couple of weeks away. We are in the middle of December. So with this, we have the relative dollar strength still above 106.64. What this means is that the other foreign currencies getting crushed for the most part. So dollar looking like the best dirty shirt in the bunch. We've got the 10-year yield, 4.3. So debt dropping a bit, meaning yields are rising again. As these two rise, it's trouble for the stock markets, means the money flows back out. And there is a bit of a pullback now. Also looking technical analysis seems to support this. So caution in the markets. Green yesterday, very good day. Volatility index increasing now. A very interesting metric is with gold. Gold actually rose yesterday's 2,745. Now, this is showing a slight bit of a fear trade because oil steady, poised for more of a pullback, but they're talking about demand dropping. So that would drop the price of oil. They are kind of managing this with the supply. Now, the surprise is not that gold is going up, Bitcoin is also going up, showing that Bitcoin is kind of hedging more as a safety trade, if you will. The surprise part is silver. Now, silver is acting more like an industrial metal, as I spoke about yesterday, along with copper. So, silver, copper dropping. We've got Bitcoin, gold going up. So, with this, let's go a little bit more into the calendar. What's going on? Jobless claims. We get this PPI prior to the market open. Core PPI again, all inflation numbers. What we're getting Friday is all going to happen prior to the market open again for import prices. So with all of this is going to, or at least expected to bolster the quarter point rate decision that should be coming out next week from the Fed. Now, I'd like to kind of go into this moment because we've got the market sentiment, the fear greed meter, all of it is in fear mode with the exception of put and call options. This is really the driver this morning that we're seeing, and it is, as you can see, extreme greed. So these are leveraged bets, and this is why I'm bringing this up. Put call options, be very cautious prior to expiration on Friday, and this can swing it as it's leveraged, can swing very rapidly. Now, we've got a couple of things coming out with cryptocurrency. Boss of world's largest hedge fund. So this is Ray Dalio. And I really like him. He is a brilliant investor, obviously very successful. And he is warning of debt crisis. I've also endorsed his video that has come out. He has studied economics over the past 400 years, the spreads and how these cycles have come. So I should put out that link to you because it's excellent if you haven't seen it yet. But he's warning of a pending debt money problem. And with this, he is endorsing gold and Bitcoin. And I think both, I agree with him, both, not one or the other, but to hedge the two together. Now, with this, we've got MicroStrategy. They're one of the larger holders of Bitcoin. And this is saying their shares could surge. They're in line to be added to the NASDAQ. I think it is being decided whether they're going to go under the sector of finance or technology because they bridge both. So with this, we've got Dogecoin also. This was just reported. So there was a flaw exploited by a hacker, crashing 69% of the nodes. So caution on this one in specific this morning. I think there will be a recovery. However, you can take advantage of this short term if you'd like. Now I want to speak a little bit about what I like to call the real economy. And as I said, what I'm watching for this is unemployment because this could set the spiral for the next depression. Now, we've got the predecessors for this. This is a relatively new option, and this just shows what is going on. We've got Flex for Rent offering rent payment solutions in order to spread out the rent payments because people in the United States can know, and this is globally also, but the examples that I have specifically are United States that cannot afford to pay their rent at one stop anymore. So now they're looking at options, putting it on credit cards and making it in payments. This is major flag. So with this on the commercial side, we also heard that commercial mortgage-backed securities or their loans for office buildings, the credit changes, our office multifamily and lodging are increasing a significant rate for November. So that is something to watch. Now, if they can't get their rents in, this is businesses struggling. Now, with businesses struggling, we're going to go a little bit farther over into Europe. And we've got Germany, top tech firm to slash their workforce. It's SAP planning to cut 14% of the staff. Now, this is along with the troubles of their auto industry. These are some of their major sectors right now taking a major hit. Now, along with this, we've got some political struggles that are happening there that are kind of increasing these pressures. Now, we've got a French political stalemate threatening their economy. Currently, with a vote of no confidence, they find themselves without prime minister. Now, with France having these troubles, we've got Germany seeing, aside from the employment issues, they've now got a huge jump in power prices because low wind generation. Now, they were relatively forced into this green power initiative, and this has choked them out. Now, they need power for their production, for the businesses, and to continue with the inexpensive power and labor are what drove the production. Now they're dropping their labor and now the energy are both dropping. This is a significant headwind for them. On top of this, we've got Norway campaigning to cut energy links to Europe as power prices soar. Now, their main line, other than Russia, we've got Russia sanctioned, so they can no longer provide because Gazprom, the main bank, can no longer process the payments. So between these two, these are massive deflationary, and by deflationary, I mean they're heading towards depression. So with this, couple of other things off the topic, sort of. We've got the FBI director in the United States resigning. Now, he's decided to leave ahead of the inaugurations, leaving early. And this is due to many of the things that had happened to him. There's a lot of stories behind this, too much to go into here, but leave it to be that he is resigning early. He's expecting to kind of have a few issues from this. And the other thing I wanted to mention, this affects Syria and the turmoil that's going on in the Middle East, because a lot of this is the geographical position of these. It's called Alantropa, the insane plan to dam the Mediterranean. And why would they do this? Now, this could control the shipping of goods through a couple of means. There are Silk Road paths that are going through here, but aside from the Silk Road, they're also talking about new canals, dams going in here that would control the shipping of goods. So something to look up if you would like to. And with this, I would like to wish you all a green trading day, wonderful day in general. Caution a bit out there. It is looking like there could be a little bit of headwinds to the United States stock market. A little bit later, we'll see how PPI comes out. So until I see you again, my friends, stay free.